How to get a loan to flip a house. This is something that you'll want to pay attention to because a lot of people do this wrong. Today, I'm going to talk to you about how to find the right property so you get a loan for it. Then I'm going to be walking you through things that you need to bring to the table. And lastly, what we're going to go through is the loans that are available to you. So prior to even getting the loan or talking to a lender, what we need to do is we need to know how to source and find deals on real estate. With that being said, what you want to look for and who you want to network with is important. You want to be able to effectively source properties. Basically, you want to be able to go out and find the deals in real estate. There's a lot of different ways to do that. At the end of this, I'm going to show you and give you a form for free. You want to be able to find the deal. This is the most important thing. Finding the right real estate deal, you're going to be able to attract lenders. So how do you do that? You're going to need to know how to network. You're going to need to know who to talk to, what wholesalers, if you're not doing wholesale yourself, do you network with to find the deals? What wholesalers actually have good deals versus what ones are selling them at retail. You want to be able to do bandit signs. There's all sorts of marketing strategies that you want to be able to take advantage of, and some not necessarily marketing strategies. Are you effectively able to go to the foreclosure auctions? Are these things that you can participate in? If so, what's involved with it? And at the end of this, I'm going to give you a free gift, and that's 100 different ways to find these real estate deals. Stay tuned and we're gonna get that to you. The reason why it's important to know how to structure a deal is because a lender is gonna wanna make sure that you know how to articulate the deal itself. Like, what's the ARV? What's your margins? What's your holding costs? Things like that. They wanna make sure that you actually understand that process. So they're lending to someone that actually gets it. So you need to understand and know how to find the best deals. They say you make your money on the buy. And this is true, but you also have to manage the cost during the process. So with the structure, you need to understand how to underwrite the deal. It may sound super complicated. Don't overcomplicate it. You want to know how to pull comps. We could show you how to pull comps. And if you subscribe to our channel, we could show you how to do all of this. So don't freak out. You don't have to memorize all this right now. Just subscribe and you could follow and we'll show you how to do this. But you need to understand how to underwrite it. Now let me explain. Underwriting means finding out what the ARV is. Also understanding your comps, neighborhood comps. What's the holding time or what's the time on market once these houses are ready to flip? Are they flying off the shelf or are they taking a little while? Factor those in on top of your rehab. Sometimes have a tendency to push the numbers. Maybe I could get the job done in a shorter period of time. Maybe the market will give me a little bit more. Do not do that. What you want to do is underwrite the deal to its entirety and don't deviate from it, because if you do, you could lose a lot of money. So underwriting the deal, let's go back to it. You need to understand what your ARV is. You need to understand your holding costs. You need to understand your profit margins that you want to make, commissions. You want to also, if you have any unexpected, you have insurance, you have closing costs. You have a lot of different things that you need to be mindful of. So take all of that into consideration. And with ARV, it's after repair value. Here's the thing. There's a lot of things that you need to do when underwriting the deal and it could get tedious. I'll tell you what, if you click on the link below, you subscribe and stay to the end, I'm gonna actually get you a free deal analyzer to help you underwrite the deal. So when getting a loan, there's gonna be different requirements or funding for your project. The thing is you wanna pay attention to, and some of the stuff that you're gonna be required to is, do you have good credit? If you don't, it's not a deal killer by any means. Some of these things just are better for you to have. If you have bad credit, maybe work on that now. It just makes things easier. You'll hear a lot of people say it's not a big deal. You don't have to have credit. This is true, but I'm just gonna say this. More doors open to you when you have good credit than when you don't. Because if you're pulling credit on someone and you're lending to them, are you gonna look at that? Of course you are. It may affect your interest rate. So work on these things. Again, it's not a deal killer, but these are things you want to pay attention to. The reason why is if you have to go to a traditional lender, then that is a factor. Otherwise, what happens is your doors kind of close. Now you're looking at hard money or private money. You may even have to bring in a partner, which is not a bad thing. I use partners all the time. It just depends on the structure of what you're doing. Things that you're gonna need to look for is, what's your down payment that you need to bring to the table? And do you need a bridge lender? If you need to bring on another partner to help with that bridge. What's your rehab costs? Are you responsible for it, or is the lender taking care of it? In most of these cases, any lender that you're working with, they know that you're buying it undervalued, but they also want to know that you understand what the ARV is, or after repair value, and the significance of that, and that you also have accurate numbers on your rehab. Most of the people that you're going to be working with have done this many times and are going to look at your numbers and make sure that they're accurate and on point. The more practice you have at this prior to getting your first deal, the better. So you want to look at these things, understand the importance of all of them, so you could best pick what way to go for you. If you found a property today, like right now, tell me in the comments below, where would you get the money to do it? Here's a couple of the financing strategies that I use. I'll use a traditional lender, not as much as I use these others. I use hard money. I love private money. That's one of my favorite because you could sit there and negotiate with that person. And typically I like to do that on the job site. When I'm meeting with them, I get to talk about the vision. Maybe, here's something that's nice. If I have this under contract, I may spend a couple dollars getting renderings of the property when it's finished so they could see it, and then they understand my vision for the property. A lot of people can't see that, so if you help them with that, it's gonna make it a little easier, especially if you don't already have a portfolio of properties to show them. This could be a win for you. And where is it a win? Listen, this is work because people will walk my properties with me in their private money, and when we're done, they've renegotiated, or we've renegotiated their interest rates down, maybe their points down to nothing, and what they're going to do as far as on the rehab. So you could negotiate all these things with a private lender. These are negotiable, folks. You want to make sure that you're taking advantage of it. Seller financing. This is my favorite way to get financing. It's what I use today. It's what I've used for a long time. It's about how you negotiate it. There's different ways to negotiate seller financing with the seller on these. You could keep them in for most of the project and bring just a very small amount to the table and then your rehab costs. Or you could put them as the bridge lender. Maybe you need 10 or 15% down. Well, these guys, maybe they'll take that 10 or 15% as a second position, meaning there'll be a second mortgage on the property and you just pay them once you flip it. So seller financing, a lot of people don't approach it. You guys should think about it, and I ask everybody for it. If you're a property owner yourself and you have equity in your property, you could take out a HELOC to buy that new piece of real estate, that investment property, or you could do a cash out refinance with interest rates as low as they are right now. That might make the most amount of sense. If someone has an existing mortgage on their property, assuming the mortgage is another avenue that I like, the reason I like it is because there's little to no paperwork. We go through escrow, and essentially I just take over the payments to the mortgage company, and I make those payments on the seller's behalf. We do that until one of two things happens. The property's either paid off, or we actually flip the property, sell it, and we take that money, pay off the mortgage, and then keep the profits. The reason why structure is so important, this is a piece that I take really personally, and you should too. It's gonna pay you dividends. This is how I personally think I get most of my loans, okay? This isn't just like, I'm not talking about a traditional loan, okay? I'm talking about a private or a partnership. Once I am able to structure the deal correctly and they can look at it and understand my vision and I have all the numbers there, I typically get all the money I need for the project and I keep half the deal. Now I'm putting very little or no money into it. Someone else is, based on what? My vision. What's the vision of? It's the structure of the deal. What's the property look like? ARV, holding costs. I back into all the numbers, show them what I'm trying to do, what the big picture is on this, how much money is going to be produced at the end as profit, and I'll keep half of that, but I am out zero money and zero risk except for my time. So I mentioned to you that we were gonna give you 2 free gifts. Click on the links below to get the deal analyzer and also the 100 ways to find off-market deals.